Attention has turned this week to corporate earnings and away from the European scene. In the US, we have started to see the first reports out from US companies reporting on the third quarter. As per normal, it kicks off with Alcoa, the steel company. They slightly beat on expectations. We've also had results out this week from Yum Brands, the restaurant group, which also did well. Their stock price responding favourably to the environment. So, as I say, corporate earnings beginning to sort of take attention at the moment. It comes on the backdrop of stock markets, particularly in the US, trading very close to 5-year highs. The opening chart that we have this week is of the Dow Jones. This indeed is the 5-year chart. If we can recall where we were back in 2007, this was at the beginning of the financial crisis, and just prior to this chart we had that dip and then rally in the Dow, taking it back up to those sort of all-time highs at that level. And then of course the sort of through 2008 we saw the Lehman's crisis, the banking crisis sort of hitting during that particular period of time. But in fairness, the bottom was achieved in early 2009, and the trend in the US has continued to move higher, to the point where the Dow Jones is now really at those sort of fairly critical levels. 14,000 possibly the sort of key marker that we should be watching in the near term. But having sort of got up to these levels, we have seen just a little bit of softness. And again, as I mentioned, it is, I think, more relating to the corporate earnings season, that over the course of next week and the week after we'll see many more businesses reporting their results. So there is some caution being built in, because there's no question in my mind that the Q3 economy in Europe, in China, and indeed the US is displaying some signs of weakness, and which was impacting on demand. So the chances of further profit warnings coming out over the next couple of weeks, I think, is there for all to see. So markets, as a result, just pausing for breath. This is the Dow Jones. I also wanted to put up the S&P index, which is displaying quite a similar trend, maybe a better barometer of the US economy, given how sort of focused the Dow Jones index is with just 30 stocks. And indeed, if we look at the UK market, it's not been such a good performer, and that really relates to the fact that we've got more financial exposure, more mining exposure, less technology exposure, which has been a major driver to the US markets. I want to focus on some stocks this week, because in the UK we are also seeing corporate reports. We've seen about 30 during the course of the last couple of weeks, and in fairness we are seeing our fair share of profit warnings. The first is of Cookson. Cookson in the city is often regarded as an economic bellwether, a very economic sensitive business. It's involved in engineered ceramics, which supplies into the steel mills, and as you came out of recession we saw a huge surge in this. This is always a stock to just remember how well it does move into economically sensitive times. So on the upswing, price does move high, but it can move quite sharply lower in tough times. Now they have reported that they saw a noticeable decline in their business during July and August, and we saw this came as a surprise not only to management, to investors only. So you saw that very sharp drop, and we commented at the time that if Cookson are warning, you may well expect to see others coming along and saying similar things. Well, indeed today we have seen Morgan Crucible come out again with a very similar tone to their statement. It looks like sales are coming in materially below expectations during the course of August. And as a result of that, they are going to miss their expectations. Both these companies have no visibility about when the situation will bounce, so they're guiding as if these lower conditions will remain with us. Do remember, if it proves to be the fact that it was a bad patch and things recover fairly quickly, then of course these stocks could well be bouncing back very quickly indeed. So it's one to keep on the watch list. But Morgan Crucible, you can see there, has had two legs to its downturn. First was the Cookson-induced warning. The second warning has taken it lower as well still. Other stocks that haven't warned but are beginning to feel just some impact, I call them the industrial cyclical stocks. IMI here is one to keep an eye on, and as another, Bodycote, Spectris, Renishaw. These are all names that I would just keep on the watch list in the near term. Just some other news from corporates this week. One of the best performing retail stocks over the course of the last 10 years has indeed been WH Smith's, and that's been a management story. It's been around the CEO, Kate Swan, who joined 9 years ago, and generally regarded as performing one of the best turnaround situations in the retail space and taking WH Smith's fortunes up a long way. Stock is up around 60% over 9 years. That compares to 10%, say, for Marks and Spencer's. Well, she's announced that she's going to leave the business in 2013. That did cause a 7% drop in the share price, and fairly so, because it's a big miss for WH Smith. But the question is, where's she going to go? Talk this week was it could be Marks and Spencer's next year. Home retail, other names are thrown in the frame. So, as I say, if you do hear where she's going and she's moving into an underperforming business, it's got to be worth looking at that particular stock. Finally, just turning to a couple of these stocks in the US, I saw a profit warning coming out from AMD. This is in the technology space, providing chips. It follows close on the heels of Intel, which reported a similar situation recently. So the semiconductor market under some pressure at the moment. I think this is as much a competition issue at the moment as necessarily end demand. Some of these companies finding that they're struggling to compete. But finally, coming back to Yum Brands, I mentioned good corporate results from them this week. It goes to show to some extent that some caution is built into the corporate reporting season, and if companies meet or slightly beat expectations, there was scope there for an 8% jump in profits. So I think the next 2 weeks are going to be as interesting for the corporate reporting season rather than the macro backdrop of Europe.